Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with TradeView, meaning you can research and discover trades on our platform and then seamlessly send them through to your trader brokerage account. Today on the show, we're going to discuss option scans based on back-tested strategies. Matt, do you want to share your screen and go over our positions from last week?
Yeah, definitely. Thanks, Tyler. So today we'll review the trade from last week, which was just we talked about profiting from a crash. So we just bought a put. That put is decaying away, as most puts do, but it's there in case something happens. This market's still near highs, all-time highs, and so we're just write it out and potentially roll it. What puts help you do is profit a lot if it goes down, and allows you to remain long or remain in your position. So that's our positions so far, Tyler.
Great. So this week we're going to look at the backtester and how you can jump from a backtest, which is like the research portion, the research pillar, into option scanning, which is part of implementation.
Yeah, so a lot of people, I've been watching other YouTubes, and they go from, first of all, a lot of people don't even bother to backtest, which is a mistake in my eyes. There are some successful traders out there, but I think they've done either a lot of trading over the years, or they backtested a lot. So if you don't have a lot of experience, backtesting could get you a lot of simulated experience in not too long. And of course, ORATS has a backtesting platform where we have listened to you guys, and we've run millions of strategies, so you don't have to. And then if you want to customize things, you can go in and do that. I personally run, probably tens of thousands of strategies. So it's very helpful. You get to develop a good knowledge of trading by doing backtesting. So ORATS has in our dashboard product, we have a backtester. You could hop over to the legacy backtester, but if you're new, I would suggest going to the backtest finder here. And one of the things that I'm looking at today are selling call spreads. It just seems like the market's a little bit high. If it keeps going up, c'est la vie. But and usually with the market rallying as much as it has, it's hard to find backtests that work, meaning are profitable in a short call spread. But one of the things that we do is we look at the environment of the market. So we've in our entry triggers, we have a VIX entry trigger. So right now the VIX is low. We call low under 15, and we've gone through and looked at the VIX historically and kind of tranched these into triads. We looked at the simple moving average, the SMA, and when you see a C by it, that's where it is right now. So it's currently above the 50-day, above the 200-day. We look at the RSI. It's in a moderate for the 14-day RSI. We look at where the implied is as a percentile. So that ranges between 0 and 100. Right now it's between that at 33 to 66. And then we also look at the slope, which is the put values versus the call values. Those are actually quite high right now. So in order to make it into this backtest finder here, the entry triggers 2 or more have to satisfy, or they have to satisfy these entry triggers in order to get in. And so here's one. Now these are the strike deltas. I don't like to go that far in the money, 44. So I'd go out just a little bit more. to a 33 and then a 6 delta. This particular strategy only trades when the RSI is overbought and when the implied volatility percentile is low. And it has an annual performance, and this might not look very high, but again, it's hard to find ones that are positive, and these are based on notional, meaning it's based on returns, not of the margin that you're using, but of the stock price. So it's more punitive. That's the daily. And it's only been in for 40% of the time. And then we could look, the nice thing about this is we could look at how it did last year, how it did over the last 5 years, how it did during bear markets, how it did during bull markets, how it did over for the margin. So that's the margin return, 52%. So I think this one looks pretty decent, Tyler. I'm going to click on it and take a more of a thorough look at it. So you can see that it's not in all the time. It's only in when the RSI is overbought and the IV percentile is low. But all in all, so far so good. Performance metrics, again, the annual return is not going to be that high, but it sure has a nice versus margin. Good luck. The drawdowns aren't too bad on this. Percent of the time, win rate 73%. So far so good. One of the things I like to do is look at similar backtests. This will take a while, but you could, I'll let you do that on your own. You could go in and look for similar backtests in the backtest finder. But again, actually, why don't we take the time to do that? We'll take out, if these are all clicked the same, then you'll just get only the one that you have would be really the only one that shows up. So I like to click off a few and see how these have done. So we'll see that now there are still a few in here, and so far the top ones look pretty good. If we sort these descendingly, then we could see how the poorest ones do. So this one doesn't do that well, but it has a really tight stop loss and profit target. And so, a lot of these poor ones are really tight stop losses. So I'm going to have a profit target and stop losses none. This is a pretty constrained test. So let's look. There's still some ones that lose some money where the stock price is below the SMA. Well, that's not where we are right now. So, or the IV percentile is high, so that's good. The ones that are doing poorly aren't really in the same entry or the market environment that we're looking at. So, what I would say is, actually, what we could do, Tyler, is just look at these when the SMA is above the 200, when the VIX is low. It's actually gone into moderate. So let's just look at those two. Well, we didn't find any, so let's take that off. So again, there are some poor ones, but all in all, I think our strategy looks pretty good. So I'm going to go back to it. And really, one of the purposes of this presentation is to show how easy it is to go from first of all, you would save this backtest to your favorites. So this will go in your list, but then you can scan for options. And so this is the neat thing that makes the whole workflow go well. So it automatically loads the symbols. You can put in other symbols if you want. It loads the short call spread. For example, actually, one of the things that I'd like to do is trade XSP. XSP is better in some cases because at expiration, if you let this go all the way, the the SPY options can still be exercised. The SPY is an American option, and the XSP is European. The Europeans, they expire directly at 4 p.m. Eastern, and the SPY expires only when something like an hour and a half afterwards. You could still exercise those. I don't know if you're familiar with that, Tyler, or not.
Yeah, I think we went over it in a previous show where we compared SPY versus XSP versus SPX, and we did a show on that before. But yeah, it's interesting that you like to, sort of find the backtest on SPY, but then add the XSP symbol based on the strategy that you're doing. Right?
They're very similar, but SPY has more liquid options. And XSP is a lot more liquid now, but wasn't as liquid. So sometimes backtesting on the XSP isn't as dependable, even though it behaves almost exactly like the SPY. So this week we'll be putting on a short call spread. Let's take a look. So the SPY is not, or the XSP is $5.99. We're selling the 605s, buying the 613. So that difference of $8 minus the 154 is the loss that we can have. So our $646, if you paid 154 for it, is your max loss. Your max gain is what you would get from this particular trade. So we'll give them a couple cents, Tyler, and we will force this trade through. And this will be the first one that we're looking at. I think we have time for another. We have time for another trade as well. So for this, I'd like to go to, instead of going to the backtester. Yeah, go ahead.
I was saying, just to recap, because I wanted to touch back on the entry triggers there. Everything in the backtest is copied over to the option scanner, with the exception of those entry and exit triggers, which you kind of have to set manually, right? So the reason you filtered on that current environment was because that's how you make sure that it's actually, replicated, right?
Right, it's a good point, and you could come and check those. So you could check. When you have your backtest, you could check that the entry triggers are in where you want them to be.
Yeah, and you want to make sure to do that, because if you're running a backtest with different entry triggers that aren't the same, that aren't the ones that are meeting the same criteria today, then it's not the same trade, right? So that's why you need to make sure to, if you're doing this workflow from backtest to option scanner, you need to make sure that the entry triggers are being met today.
Exactly. And then, however, when you're using the trade ideas, or when you hop directly into the backtester, those will be set to come up. So
the trade ideas already do this, right? So the trade ideas are only showing you backtests that have those entry triggers that meet the current environment.
Exactly. So what I'd like to do now is, we have a bearish trade. So I'd like to look at the neutral strategies, but lean bearish, or go to the bullish. I'm sorry, I want to lean bullish to kind of offset our other trade. And we still have that put on. So we're kind of bearish out there right now. So you could sort these on probability of profit. I like to use the Sharpe ratio, because it considers the return and the volatility of the returns and gives you the highest ones there. So for example, we're sorting by Sharpe, and it sorts it descending line. So so this is an IWM long put calendar. So a put calendar will be a little bit bearish, but this is selling. This might actually be a decent delta. Let's just take a look at it. So the delta is slightly positive. This doesn't look too bad. Iron butterfly, long straddle. We already have a long put, so I don't. So I'd be leaning towards one of these, Tyler. Let's take a look at this other.
I like those put calendars because they're pretty short-term bullish, and you know, if the market goes up a lot, then you're not making any money. But because you're sort of leaning bearish, then you think that's pretty low likelihood of happening.
Yeah, I mean, so you basically break even everywhere else except for you make money here. But if it goes down big time, you lose a little bit.
Yeah.
So pretty good, but I'm not that in love with that. So I'd rather find. Let's just see if we could find any good bullish trades, straight up bullish trades. All right, so here's a short put spread. That's in March. Sharp ratio. So here's a D. So I'd like to find a short put spread that isn't too far out. Feb is pretty far. Let's see if we could find any short put spreads that don't have that many DTEs. January might be our best bet so far. Yeah, so here's a D. So, okay, so here's a D. 10 to 1. Not crazy about 10 to 1. How far out of the money is it? Not that far. So I don't necessarily want to do that one. Let's go back up and do that Jan. So I'm kind of torn between the Feb, but that's pretty close, and that's 10 to 1. Here's a Jan, 13 to 1, but it's pretty far out of the money. 480. God, I'm torn on this. Let's take a look at. I'm looking at the payout pictures. Those are pretty similar. Looking at the back tests. So this is a pretty nice payout picture here. Let's look at the other one. View back test results.
Yeah, that back test looks pretty good.
Yeah, that's better than this one, don't you think?
Yeah, definitely.
Yeah. All right, so let's do that one. So longer term, we like it. We'll give them a couple cents. We'll force this one. And yeah, that'll be our trade, Tyler. Got two for the price of one.
Yeah. So we have a question from a viewer. Says, how many negative deltas are you carrying in your paper trading portfolio?
So, I have some of these. I have a paper trading account, but I do some of these trades in other podcasts. I hate to say that, but I'm cheating on Trader a little bit. So I do a number of podcasts a week. But for this one, we just have short deltas. So we have 10 short deltas for the SPX. We have, it's a good question. We have now 16 long. And so we did, what did we do? We did do we do another trade here that I'm missing? The XSP is 19 short. So we are about, I don't know, 15 short right now. And I feel pretty good about that.
For everything or just for SPY?
Well, no, for the Trader Hub trade. So we have the three. Yeah, so we have the existing put. It's like a 9 delta. We have the call spread that we put on. It's like a 20 delta. And then we have the long of 16.5.
Gotcha. So for just the trades from the Trader Show every week.
Yeah. Okay. These other ones, I'm on, 5 or 6 other shows. So I put them on in different areas. Doing pretty good though. This started at 100,000. So, and
Nice.
this NVIDIA, I think this was a trade show. We've continued just to ride this one. So we're pretty protected on this one. Very protected, I'd say, but still doing pretty well.
All right. Well, thanks for the question, Mike. Thank you, Matt, for answering that. Yeah, I think a pretty short show this week. I mean, unless you have anything else to show, Matt. I mean, we showed the trade ideas and the importance of going from a backtest to an option scan and making sure those entry criteria are selected as the current environment. And then you also got to make sure to copy over any of the exit triggers that were in that backtest if you had any.
Yeah, there weren't any, but yeah,
But that's how you go.
Yeah, so when you fill, then you could go back and click. You could click on triggers here if you but we're going to probably let this ride pretty far. You could put alerts, and I don't know if we've showed this, but you could restore them from history now. So maybe I'll find one that we're short. So I will do, I'll just, plus or minus 50 is what I usually put on. And then I'll put on T-Hub. Put your notes in there, and then this is neat because you get an alert to your text, and you go, oh yeah, I have that one. So I'll check that out. Right. Yeah. So and just back to what you were talking about before, Tyler. You want to do, I would say, hundreds of hours of backtesting, and we give you plenty of ways to spend that time well and efficiently with the ability to look at similar backtests. You could look at those setups with other symbols as well. So it's really powerful. And then when you find a backtest that you like and it matches your investment objectives, then save it to your favorites. And then, like you mentioned, when those entry criteria meet, then put that on, and it's very easy to put it on through the scanner, and that's the big point of all this. It's all tied in, and it's a very scientific way to trade that is backed with a lot of data. So I mean, it's something that I wish I had way back in the day when I started trading, Tyler.
Yeah, it's great that this can be accessible to so many people. Such an easy to use, holistic approach. So really great.
Yeah.
Thank you, Matt.
Thank
you, Trader, for hosting us again. We'll see you guys again next week. If you have any questions, just like Mike did, you can comment in the YouTube, or you can email us at support@orats.com. You can write us on social media. We're always checking those things. So, just let us know. We'll be back again next week. Thank you guys for watching.
Thanks, Tyler.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.